Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. Usually what I do in these videos is talk about the economic data, see how that's impacting the overall markets, and then wrap it up with some trades that I'm looking at to implement in my portfolio, or even take those up for a profit, and sometimes maybe even a loss. So please check that out. If that's something that strikes you as something interesting, please hit that subscribe button, and next to it there's a little bell to give you an indication of when I pop in here unannounced, which is quite often during the week. So make sure you guys are subscribing and hitting the bell so you get the notification. Smash the like button, please, as that signals to everybody, all these little bots in the web, to go out there and find somebody like you to share this content with, and comment throughout the video to make sure that I'm covering what you want to see in these videos. So throw it in over there at the side. All right, let's get on with it. Economic data across the pond, really not a whole lot going on. PPI coming in a little bit hotter than expected earlier on this week. We talked about that. That is something that we are expecting to see going forward. These PPI numbers are the producer price index. That is what the manufacturer, the person that is making the raw goods and services, sees for their inputs that they are going to be manufacturing another product with. That means they're going to have to base their prices on that. We're going to probably start to see incremental prices going higher here. Then here in the United States, we got the Philly Fed manufacturing number. We've been seeing these numbers dip last few months. Well, they're starting to rebound right now. And we got the Philly Fed coming in at 39, expected to be 24 there. Unemployment claims coming in at 268,000, slightly higher than the expected 250,000. And throughout this week, we talked about this. Fed governors speaking all week. So they are in that period where they don't have to kind of cinch their lips ahead of the FOMC. They get locked down about 2 weeks beforehand where they really can't talk about economic policy. Well, we're in that lull of that. So they are all taking their opportunity to speak to folks out there. Another thing we talked about, forgot to talk about yesterday, was the crude oil inventories number there. And that came in a little bit light, I believe, expected to be a drawdown of, or actually it's supposed to be a build of 1 million barrels. It came in as a drawdown of 2.1 million barrels. Now we saw the crude oil market really come off yesterday based on that economic data point. And one thing I was expecting to see is that with this demand, we're seeing the manufacturing sector, right? I talked about that. That's where we're going to see this major demand coming from crude oil. And yesterday, today with the Philly Fed, we're seeing a lot of these manufacturing numbers coming in a little bit stronger. That's going to add demand to crude oil. So I was a bit surprised yesterday when we slammed down, but we did find support on this Fibonacci right around $77. Today, up and away. And this is one of those candles I'm always looking for at the bottom of a move, the hangman doji, if you will. At the bottom of this move. Now, obviously, we're waiting for a confirmation that would come tomorrow, but a setup on a candle like this, especially settling above this Fibonacci, is very strong. So risk assessment to the upside in crude oil over the next probably week, I would say it's going to start trudging to the closer to the 100 than the closer to that 60 that I was hoping for. Bonds. Yesterday got a little bit of a bounce. It was probably due to some of the equity weakness that we were seeing across the board. Gold futures still holding on to some strength. That whole paradigm around inflation really holding true with gold. I'm expecting gold to stay up into these 1800s. So not really a risk assessment any further. I don't know that we're necessarily going to see $2,000 an ounce, but I think that we'll definitely test the 1900s several times here, especially if we're continuing to see these PPI numbers, GDP numbers starting to ramp up there. And we got Bitcoin. It's off a little bit today. I was expecting this to hold on to a little bit more strength as we're seeing with gold, just because of the inflationary focus here as of recently. And VIX getting a little bit of a boost to the upside, and that's due to the weakness we were seeing in the equities. Now, topping pattern here last couple of days. That means we've got a bit of a confirmation here in the Dow Jones Industrial Average. I would expect us to see some more weakness here with that confirmation. So I would say risk assessment, despite the fact that we are seeing with retail earnings coming out much better than expected, Target and a couple other folks coming out with better than expected earnings there on the retail front. That could be the discounted, I guess, thesis here is that the retail sector could start driving this market higher in the equities, but I'm thinking that the equities are going to be a little bit weak today, just with some of these chart patterns there. A little bit of fundamental versus technical analysis paralysis here on the equity markets right now. Who's going to win, the fundamentals or the technical analysis there? All right. Well, another technical analysis setup here at the bottom of this move in Penn. You can see yesterday hoping for, Tuesday hoping for a bit of a bottom there, not getting any follow through. As a matter of fact, making a newer low. So this market looking pretty weak here. And if you guys remember, I have on a couple of things. I have in my IRA, I'm long Penn, so that's not working out too well, but I've lowered the cost basis on that trade throughout. So I'm not too overly concerned about this. But one thing I did do, and I was getting a little concerned about this, we had some low volatility in this market. So I decided to get involved in this around those earnings with that low volatility. So not usually a strategy I would implement before an earnings on something like this because of the way that I set it up. I usually like to collect a credit when we're trading options around earnings, but the volatility in this underlying was so low that I had to take advantage of expansion and volatility if anything were to happen. So I went way out into the January and I did the 75 straddle in there. I bought the 75 straddle because I was expecting a move to either direction. Now, this protects me in my IRA synthetically, but one thing I don't like doing is losing money in my IRA where it is tax deferred, whereas then I'm making money in my trading account. So it is offsetting some of the losses in my IRA, but not the way I necessarily want this to work out, to be quite honest. Anyway, did that 75 straddle. You can see that the market has fallen off from that point of control since then, and continuing to see lower moves here. Now I'm looking about covering this entire trade here, waiting on what happens today. If we get some more follow through to the downside, I'm going to cover my IRA and let this one ride out a little bit longer if we start continuing to roll over. Now, again, if we start to bounce here, then I'm going to be looking to cover the straddle and hold on to the Penn stock there. So those are the couple of trades that I'm going to keep an eye on today because it's a bit of a balancing act right here. Now, Macy's, I'm hoping to see a little bit of an up move here because of the retail sector getting some love overnight with Target and those folks coming out with better earnings. So with that said, the trade that I have on in Macy's not going to work out very well for me. As a matter of fact, it's almost a full loser right now. I expected the retail sector to suffer a little bit more than this. And so I went into the November, so they're going to expire tomorrow. I've had this trade on for quite some time with this trade in the November, bought the, the 21 puts in there for $1.75. They're basically worthless right now because all the theta, everything else is coming out of these. I did this trade on the 26th of, when did I do this trade? It looks like it was the 26th of August here. So quite a ways back, and the trade has never gone my way, obviously, but expecting a couple of opportunities and the market just trudged to the upside. So this is obviously a full loser unless tomorrow or something else happens for their earnings that they end up seeing this underlying just fall over out of bed. But I'm not expecting that to see that with all of the brick and mortar stores doing very well. It's probably going to be garbage at the end of the day there. Then finally, the last one I wanted to talk about here was Delta coming back down to the point of control here. This trade, also a trade that I had put on for the puts, but we haven't quite made this move quick enough. I put this trade on right around in here when we had some high volatility. Market got a bit of a pop, and at that point, as soon as it made that move against me, this trade ended up being a loser right away. I did the November, bought the 38 puts in there for 34 cents. So not even close to that. As you can see, we need a little bit more of a move. I was expecting to test this value area low off of this chart pattern setup. We got a bit of a topping pattern there, but no confirmation. I got in a little bit early. Next day, popped to the upside, got the shorts on their heels. And now we're starting to come back down to the point of control after all of that is said and done, and the theta has come out of everything on this trade. So with the Delta Airlines, despite the fact that it is very close to where I put this trade on, all of the theta decay has come out of it. Volatility held on to it, but the theta decay just obviously superseded everything with this trade. So in those November 38 puts that I'm long, just going to let those expire. Crazier things have happened. And that's about it. I hope everybody has a good one. I'm going to be checking in maybe a little bit later, trying to work out some other details for fun things for you guys. So check those. Keep your eyes out. Make sure you guys have subscribed and hit the bell, because the bell is going to get you those fun videos where I'm going to be out and about. All right. So smash the like button, comment, all of that jazz. And if you can't take that, take it easy.